Hello everyone, welcome to the daily market analysis video where I try to explain the market action and I share my knowledge, my insights regarding today's market action and my views going forward. So without further ado, let's jump on right into the analysis. So today's day was more focused on Federal Chairman Jerome Powell. So Fed Chairman has multiple speeches across the year. So today was one of them. Now, the market seems to be very positively reacting on the Fed Chair Speaker's remarks. So, this was the theme of the day. It seems that the Fed is done hiking the rates, and that is why market is liking the stance of Federal Chairman Jerome Powell. So, with that theme in the view, and with that bullish action, I want to start my analysis with the weekly time frame. So, in the weekly time frame, I wanted to highlight these three important points. What are those? Two of them you're already familiar with it. So, for example, we are perfectly getting rejected from the Bollinger Bands. We are also having the initial support at 15,700. And most importantly, we made a doji, that is, this is the Friday, and since this is the end of the week, we can conclusively say that the week candle is over and we have made a doji. So let me show you what do I mean over here in the charts. So as you can see over here, this is the weekly chart. And in the weekly chart, I explained it in the earlier days that this would have been the fifth consecutive week if we close it in green, and which is very rare. And right now, what we are seeing over here is a doji. Now, for all of you who are familiar with the candlesticks, whenever this kind of doji happens, this exactly means indecision. So markets cannot conclusively decide on what to do. Is it bullish? Is it bearish? It's that indecision is very evident over here since it is making a doji. So on the weekly basis, essentially we have done nothing. Why nothing? Because we have started over here and we have rejected from the top of the Bollinger Band and we ended over here. So essentially we went nowhere. So this is the importance of the doji, that right now the markets are in the mode of indecision and confusion. So moving forward, it is very natural and normal for the markets to digest the gains that have been made since last 4 to 5 weeks. So obviously this cannot be a sign of a major pullback, but at this point we should be very cautious. At this point, if you are in heavy profits, then it makes a lot of sense to actually trim down your position. And if you are investors and you're looking for a really long term, then you don't need to worry. But for all the swing traders out there who close the position within weeks or within days, this might be a good opportunity. Now, I'm not saying that this resembles a very big, downturn, but what I'm saying is this is the time to be cautious. And this is my final take on weekly charts. Basically the initial support for the weekly level is this one, that is the 5-day moving average. So if we see a pullback or if we see a meaningful correction, then this blue line, that is the 5-day moving average, would be the first line of defense. So on the weekly level. So this is my take on the weekly charts. Apart from it, there is no very recent developments or any unusual things that I see on the weekly level. If I see anything unusual uptick in volume or anything, then I will let you know. So up till now, this is my take on the weekly charts. Let us now jump into the daily analysis. So starting our analysis of the daily charts, I would like to highlight these important points. Now, the most important point for today's daily market action was we took the support on 13-day moving average. And I will show you this in the chart itself. So if you can see over here, this is the daily chart, and the green line, that is the 13-day moving average that you see over here, that acted as a very big support. And today we actually validated that support and bounced from that. So this green line, that is the 13-day moving average, got validated. Also, the biggest development and very shocking to me was we also reclaimed the 5-day moving average, that is the blue line that you see over here. So in one single day, we reclaimed this 13-day moving average. We also reclaimed the 9-day moving average, and we really reclaimed the 5-day moving average as well. So remember yesterday I told you that for us to be bearish, we need to lose or break down below the 5-day and the 13-day. Only then we can expect a down day or a pullback or a correction. But without devastating or destructing the 5-day and the 13-day moving average, there is no possible way we can go down. So the price action, the chart data should be of paramount importance when you're doing technical analysis. So always wait for the confirmation and wait for your view to get developed, and then take the necessary action. So this was the perfect day to showcase, because yesterday everybody was waiting for a trend reversal, and bears were happy. But until and unless we get the confirmation, there's no sense in predicting, right? So that's exactly what happened today. Now the reason for this may be not as evident and logical, but the thing is, today Fed Chair Jerome Powell had their speech. And Federal Chairman Jerome Powell, as you know, Fed is a very powerful institution. It's the central bank. And when the head of the central bank speaks, it has a huge impact on the markets. So now, I'm not saying that this one-day positive reaction of the markets on the remarks of Federal Reserve is going to set the tone for the next few months. All I'm saying is apparently currently the markets are assuming or having an impression that the Fed has stopped raising rates, and that is why markets are happy. So going forward, we have a lot of headwinds, and let me tell you why. Because in December, the CPI and the PPI data, that is the consumer price inflation numbers, are going to get released. And that is, the biggest, factor of Fed taking its decision to raise the rates or not. So that would be a very big catalyst, either on the upside or on the downside. So till then, till the Fed meeting happens, or till the FOMC committee decides on their decision to hold the rates or to raise the rates, I think we are in this chop zone for a lot of time. So as you can see, since last 2 weeks, we are only chopping around. But one peculiar observation that you can see is we are making long wicks, both on the upside and on the downside. So if you see over here, this was the wick on the upside, this was the wick on the upside, this was the wick on the upside. But since last 2 days, we are making wicks on the downside. So there is a heavy indecision in the markets right now. So until and unless those outlook clouds are clear, we need to be very cautious, and only trust the market action, only trust the charts. Do not trust any other people's narrative. Right now what we have over here is we closed the week with a doji, and right now on the daily time frame, everything is looking bullish. So it's very hard in terms of emotionality, that hey, we are waiting for the pullback. But until and unless charts doesn't tell me to be bearish, I won't be bearish. So keep a close eye on these levels. As always, I try to prepare myself for both the upside and downside. So I'll tell you the immediate target for those of you who think it's going to go up. The immediate target or the price where it's going to stop is this, that is the zero lag EMA, and this level is 16,180. And for those who think it's going to, like, markets are going to go down, the main the initial support is going to be this 13-day EMA, and the next support is going to be this 26-day EMA. So only keep a close eye on these EMAs, and you will be way better off. So this is my take on daily, market action. So far, I don't see any unusual things that are peculiar that we need to, take care of. The volumes are also increasing, as you can see over here. So no problem with that. So yeah, this is my take on daily chart. Right now, the price action is bullish. We are just consolidating in the range. Even if we see the pullback, won't be that bad. Why? Because the first level of support is going to be this red line, that is 26-day EMA, and finally it is, the 50-day EMA. Now, for those of you who think that, because of this rate hike cycle, we are going to go into the recession. And so let me tell you this very honestly. Economy, the real economy, and markets do not go hand in hand. So markets are anticipatory in nature. If they think that the recession is going to come, then the correction happens way before that. So prices are anticipatory in nature. For that, like what it means is it is pricing in next 6 to 8 months of activity. So this is just a jewel of knowledge or experience, I would say, that every market participant should know, because normally what people ask is, if economy is doing so bad, why is the market going up? So that's the dichotomy, that's the divergence. The real economy and the markets goes hand in hand over a period of time, but it doesn't affect immediately. So that's the correlation that I wanted to discuss between the markets and the real economy. So now with that, let's jump on to the intraday time frame, where I share my insights on the day trades that I take. So on intraday today, my strategy was very, very unique. And I think everybody who is trading intraday should know this. So always remember, whenever you go into a trading session, especially when there is a probability of a high volatile event like Fed speaker speaking, always remember to trade after that volatile event. So the Fed speaker had their speech, Chair Powell had their speech. So I made sure that I traded after that event, so that whatever his remarks are, first let the market digest that fundamental event, and then after that I can respond to the reaction of the market that happened due to the Chair Powell speech. So let me show you what do I mean. So when we go to the intraday charts, right over here, this is the 5-minute chart. And over here, you can see that in the economic calendar, Fed Chair Powell was supposed to start his speech on 8 o'clock. So my first and final, strategy was I should wait for the 8 o'clock, let the, Chairman Powell finish his speech, and only then I should trade. So as you all know that I tend to wait for 30 to 45 minutes of the session, but today was a special day. Why? Because the fundamental underlying, fundamental underlying newses or the tectonic shifts were, very, very high. The stakes are very, very high. So whenever these kind of special days happen, always make sure to trade after that event, so that you can know the reaction of the market, and then finally you can respond with the trade. So you got the gist of what I'm saying, right? Let the market reacts first, and then you respond according to that data. So this is very, very important for traders out there. They think they can outsmart the market and they can take the positions in advance, and they can make the profit. But the problem is, you don't know the depth of the market, how much it's going to react. And let's say if it's in your favor, the position is in your favor, then you make a lot of money. But the problem is, what is the probability of you making money? So that is where the risk reward ratio comes into picture. And that is why I say, let the important news event happen and then trade. So with that view in mind, you can see in the charts that today, first of all, we were taking support on the 13-day moving average, and that level is this, almost around 15,860. So and also this level coincides with the support level, that is the S1 support level of the pivot. So as you can see over here, like this is the S1 support. So I knew that going into the trading session, if the markets are taking the support at S1, so and then after the Powell speech, The latest crossover that I got was a bullish crossover, that is 5-day moving average cutting the 26-day moving average from below. So that is the bullish crossover. So once the price, conclusively broke out of all these moving averages, and then it digested for a while, and then we got the breakout. So that was the time to go long, right? So this is the, thought process and decision making, factors that I take into consideration before going into the trade. So this is the reason why I went long, right? We were holding the 13-day moving average. We were getting a bullish crossover. And by this time, even Fed Chair Powell was done speaking. So this was the time to go long. So this white line that you see is the pivot zero, like P0, right? This one. So if we are holding above the P0 line, right, then it does make sense to go long. So that's why I went long. And you can see that even after that we got a pretty nice move of 71 points. Now, obviously, I did not have the patience to, hold my position for 71 points. But as my system, as per rules of my system, I just got out by 15 points. So that's exactly what I did. And then you can see the markets, just chopped around for a while, and then we closed on green. So this was my, view going into the day trading, like for today at least. So I'm sharing this thought process with you so that you can make and start making your own decisions, and have a, good reason which is backed by data to have you to get you an edge. So if a trader has an edge, if he has a proven system, and if he has the risk reward ratio, on his side, then and only then it does make sense to take a trade, right? So that's the, reason why I traded. And that's the reason why I went long today over here near the P0 level. So that's my, insights regarding the intraday. Also, as you can see, QQQs were pretty much in line with the NASDAQ contracts all over the session. So nothing new in that. Even VIX was going constantly down. So that was a, major indication. So yeah, I think that's my take on intraday. So finally, I would like to thank you for your viewing, and I would like to thank you for your time. A lot of effort goes into creating these videos and providing the insights and sharing genuine knowledge. I try to give, the most unbiased opinion, that I can give. So please feel free to like, share, and subscribe. Also spread out the word for those who really want genuine information backed by data. And please do all those good stuff. And until next time, see you tomorrow.